Did you know that 2025 could be the year you start building wealth? Even if you're just getting started with investing, the stock market might seem intimidating, but trust me, it's one of the easiest ways to grow your money over time. In today's video, I'm going to show you exactly how to start investing in the stock market in 2025, with simple steps anyone can follow. Whether you've got a little or a lot to invest, I'll help you make your money work for you. Hey there, welcome to the channel. I'm Serene Success, and in today's video, we're diving into how to get started with investing in the stock market in 2025. If you've been thinking about investing but aren't sure where to start, or if you're worried it's too complicated, you're in the right place. We're going to break it down into super simple steps, so you can start building your financial future today. No jargon, no stress. Let's get started. First, let's talk about why you should consider investing in the stock market. The truth is, saving money in a regular savings account isn't going to help you build wealth. Why? Because the interest rates on savings accounts are so low, they often don't keep up with inflation. The stock market, on the other hand, has a long track record of providing higher returns over time. By investing in stocks, you're buying a small piece of companies that are growing and making money, which means you can grow your money too. Over time, with patience and smart choices, your investments can pay off big. Now, before you dive in, let's go over a few basics. At its simplest, a stock is a tiny piece of ownership in a company. When you buy a share of stock, you own a small part of that company. If the company does well, the value of your stock goes up, and you can make money by selling it at a higher price than what you paid. Sometimes companies also pay you part of their profits through something called dividends. But remember, stocks can go up and down. That's why investing is something you do for the long term, not a get-rich-quick scheme. Before you even think about picking stocks, take a moment to think about why you're investing. Are you saving for retirement, a down payment on a house, or maybe you're building wealth for the future? Knowing your goals will help you make smart decisions about where to put your money. If you're investing for something far in the future, like retirement, you can be more aggressive with your investments. But if you need the money sooner, you might want to be more conservative and focus on safer options. There are a few ways to approach investing in the stock market. The two main strategies are: 1. Active investing. This means choosing individual stocks and trying to beat the market. It's exciting, but it requires research and time. 2. Passive investing. This is what most beginners start with. Instead of picking individual stocks, you invest in things like index funds or ETFs, exchange-traded funds, which are collections of stocks that represent an entire market or sector. This strategy is simple and low risk, making it a great choice for people just starting out. In 2025, passive investing is gaining popularity because it's easier, and studies show it tends to outperform active investing over time. Plus, it's much less stressful. Once you know your strategy, it's time to pick a platform to buy and sell stocks. This platform is called a broker. There are plenty of online brokers to choose from, and most of them make it easy to get started with little to no fees. Some of the most popular brokers in 2025 include Robinhood, great for beginners with no commission fees. Fidelity offers research tools and low fees. Charles Schwab, perfect for both new and experienced investors. When picking a broker, look for low fees, user-friendly tools, and educational resources to help you learn more as you go. Don't worry if you don't have thousands of dollars to start with. In 2025, many platforms allow you to invest with as little as $1, so you can start small. The key to long-term success is diversification, putting your money into different types of investments instead of betting everything on one stock. You might buy a mix of growth stocks, bonds, and ETFs to spread out your risk. Diversifying helps protect you from losing money if one investment doesn't do well. The idea is to have a balanced portfolio that can grow over time, even if some of your investments drop in value. Here's the most important tip: patience. The stock market will go up and down, But if you keep investing regularly and stay in the game for the long haul, you'll give your money the best chance to grow. Set a plan to invest a set amount each month, even if it's just $50 or $100. Consistency is key. Over time, the magic of compounding, earning money on your earnings, will work in your favor. As time goes on, take a look at your investments. Check your portfolio at least once a year to see if it's still aligned with your goals. If you're closer to retirement, for example, you might want to move some of your riskier stocks into safer investments like bonds. But remember, don't panic if the market drops for a little while. The market always recovers over time. Keep your eyes on the long-term goal and stay calm. So there you have it. How to start investing in the stock market in 2025 in 7 simple steps. Start by setting your goals, choosing your strategy, picking the right broker, and starting small. The key to success in the stock market is patience and consistency. So, start today and give yourself the time to grow your wealth. If you found this video helpful, don't forget to hit that like button, subscribe, and turn on the notifications so you can stay updated with more tips on investing and personal finance.